Hey, welcome to the 40 Finance channel. Today we're going to be looking at Chipotle stock here in the first part of 2025. We're going to look at this one as a potential beaten down play, whether for a long-term swing trade or perhaps just a good entry price for a long-term investor. And as we go along here today, we're going to be using SeekingAlpha Premium for all of our data points and analysis. If you're interested in learning more about SeekingAlpha, make sure you check out the link in the description. Get a 7-day free trial as well as $30 off your first year. Potentially support my channel as well, which I appreciate. Now let's jump into Chipotle stock. So right off the bat, you can see on the year to date here, you are down 16%. And this actually comes off of a relatively good earnings report they recently had. But as this writer outlines here on SeekingAlpha, you're really looking at a stock that has just been overvalued, perhaps for too long, and now people are starting to have their concerns across the stock market about the economy, about the consumer, and depending on who you ask, that's really the reason that this one's getting dragged down, as well as the usual tariff talk, employment talk, all those things. Keep in mind that you're in the restaurant space with Chipotle, so beyond Chipotle, you're just not going to see a lot of stocks with high PE multiples attached to them in the restaurant space. Chipotle has been one of those stocks, but it's always going to be under intense scrutiny to grow because of that designation as a high multiple stock in an industry where you typically don't see that. Now, this author highlights Chipotle boasts impressive growth and margins, but remains too expensive for value investors, leading me to maintain a hold rating. Despite a 5% pullback and strong financials, the high trading multiples in the restaurant space make the stock unattractive for a value investment. Notice he is talking about a value stock investment, which may be a different perception or goal that other investors have. The company's growth is driven by increased locations and rising comp sales with a focus on expanding Chipotle lanes for higher revenue and profits. Chipotle's net cash position and long-term investments enhance its safety and growth flexibility, but not enough to justify a bullish upgrade for this particular person. All right, quick check of our moving averages just as a reference point. The 50-day is down minus almost 13%, and the 200-day is sitting about the same place. And if you can look through all the noise and identify the purple and this maroon orangish line, you are right at the old death cross territory. So if you buy into a 50-day, 200-day death cross scenario, you may want to hang on a little bit just to see if it happens and potentially tanks the stock more from here. For what we're doing, though, today, I'm looking more or less at the fundamentals, focusing notably on the growth rates. So we talk about growth in stocks all the time, and the key differentiator for most stocks when they're competing against themselves is, can they maintain the same growth rate that they've had in their successful years? And when we look at Chipotle, revenue growth forward, the consensus opinion is they hit about 13% this year. The 5-year average, though, for Chipotle is 14.6%. So that is almost minus 9% off of a pace that they've averaged over the past 5 years. Then if we go down to EPS growth, this year you're looking at about 19% if consensus holds true. But that is down significantly from the 5-year average. So the 5-year average for EPS diluted growth is 35%. They normally grow that line at 35%. Now the consensus is 19%. That's better than most restaurants, but in Chipotle's case, competing against itself, that's a growth rate at the bottom line that's slowing by about 40% year over year. All right, now let's look a little more closely at these consensus projections. So we have a standard fiscal year ends December of 2025. EPS estimate right now is $1.29. You've got 34 analysts on it, pretty wide range. The low input is $1.14 and the high is $1.58. Either way, if they hit the consensus number of $1.29, that would still be double-digit growth on the bottom line. 15+%. The problem is this number is lower than what they've done in the past, and you have a multiple that far outweighs the rest of the industry. Now let's look at revenue. So revenue estimate right now, $12.67 billion. That's about a 12% growth rate if it comes in. Again, double-digit growth rate, but significantly less than what Chipotle has seen in the past. So 99% of restaurant stocks would love to have this number of double-digit top and bottom line growth, and I think that's what makes Chipotle an attractive investment over the long term. The question becomes, what would you pay for growth in this situation? So I put together my sort of greedy price projection that I'll share with you here. Quick review, Chipotle growth versus their 5-year average. On a revenue pace, they're down about 10%. On an EPS pace versus their 5-year average, their forward numbers are down about 50%. So price today was $50.75 when I typed this up at a 40 forward PE. I personally would be much more comfortable in that 30 or 31 forward PE range. You multiply that by $1.29 EPS consensus, and you get a price of about $40. So Chipotle started the year at about $60 for the stock price. You're down to $50 right now. I say if we continue to see weakness in the stock market and the consumer, like we've seen over this past 7 to 14 days, my target entry point for Chipotle would be about $40. I think that that's a fair price, and I think that that's a good price for a long-term investor. It might also be a good price for a longer-term swing trader who knows that the economy is kind of slow right now or on unstable ground, and perhaps the $40 share price can get back to this 50 number, maybe even the 60 number as analysts start to look ahead at the end of the year to 2026 numbers. All right, guys, let me know what your greedy price is for Chipotle stock and what you think of the stock in general. Before you go, don't forget to check out that special offer for Seeking Alpha Premium down below. I hope everybody's doing well. We'll see you on the next video.